audiences from around the world. Welcome to the Insurance Guys podcast. My name is Scott Howell, your fearless host and leader, insurance agency owner and insurance evangelist for I Protect Insurance and Financial Services, based out of Huntsville, Alabama. And before we get started on today's episode, please help me welcome. He is a 6'3" sophomore from Mobile, Alabama, parade first team All-American, Rivals 5-star recruit. He is a fantastic insurance agent and a great American. Ladies and gentlemen, please put your hands together and welcome the incomparable Mr. Bradley Flowers. How are you, Bradley?
Good, Scott. How are you?
Best I've ever been, Bradley. We are a week away from college football season. Are you going out to Baylor to watch the Auburn Tigers roll around with the Baylor Bears?
Absolutely not.
Would you?
No interest whatsoever.
I once again bought season tickets to Alabama games this year. I've got 2 tickets. We split those up about, the non-conference games, and probably 3 of their 5 or 6 home games. We'll do some kind of customer giveaway or do like a lead generation thing on Facebook with them. And then I think Kim and I are only going to 2 games this year. We're going to the Alabama LSU game and the Alabama-Oklahoma game because my buddy's getting honored at that game. But I'm going to try to take Wyatt to an Auburn game this year.
There you go.
I haven't been to an Auburn game in 3 or 4 years.
We, these bowl games, you'll get people that go to the bowl game that have no affiliation with either team. So there was a group of about 6 guys that were sort of one row over from us, and they were not a fan of either team. So they dressed up as the officials. And so every time a flag was thrown, they would stand up and cheer.
Are you kidding
So
me?
they were there rooting for the officials. It was hilarious.
It's hilarious.
And they might have had 1 or 2 adult beverages.
Maybe.
Got a little rowdy there towards the end.
Yeah.
But, yeah, it was funny. That was the highlight of the game for me.
So I don't remember who played last year in the bowl game, but for some reason I was at a trade show in Nashville, and whatever the 2 teams were, again, I can't remember who it was. That Saturday, I remember going out of my hotel and seeing like busloads of, when I say busloads, you know how Nashville is. It's not real buses. It's the party deck buses, with people hanging out the top of it screaming. And I thought, I'm kind of glad I'm not going to wherever they're going because they look drunk. So, guys, we got a special guest on for you today. I am fired up to have him on this program today. This is actually going to be his 2nd time on the Insurance Guys podcast, Bradley. I'm excited about that. He began his career. I'm going to give him the introduction, the 2nd introduction he's always deserved. He began his career at McKinsey & Company working on digital transformation with State Farm. And he has a history in the insurance world. He immediately recognized that there were a lot of gaps in the way technology could disrupt the insurance industry. He was frustrated with providing consultation with limited speed and action, so he left and started 2 startups before starting his current position and the current carrier that he's with now. Along the way, he decided to buy some rental properties, as a lot of us have, Bradley, hint, hint, as a side gig. But after having one of them burned down, he realized he could build a better insurance solution that services rental property owners. So in 2020, he founded and became the CEO of Steadily. Ladies and gentlemen, it is my profound honor today to introduce to you 2nd-time guest on the IGP, Mr. Darren Nix. How are you, Darren?
I'm doing well, and I'm looking for football tips because I'm going to be up at Michigan for my first game in a very long time, September 13th, and I need to know what to expect, how to get the most out of it.
Well, I would say, Michigan plays a lot of games around noon, right? If you can, and I'm sure you do, get in with somebody who's got a really good tailgate and just have fun, enjoy it. And,
you can't lose if you win the tailgate.
That's right. You can't lose if you win. We have an old saying down here in the South, you can't get day drunk if you don't start during the day. So that's kind of a joke, but not really. A Michigan game is going to be a lot of fun. Huge stadium, huge stadium. Can I ask the question, and you may or may not know, do you know who they're playing that day?
They're playing Central Michigan, so the tickets
Okay.
were seat, but the reason we needed to go is my nephew just started as a freshman at Michigan and he got into band. So he's going to be performing. It's going to be his first performance there.
Dude,
And
that
we
is,
got seats as close to the student section as we could. So we're going to fly everybody up there.
man, that is going to be so much fun. And you're going to be a proud uncle. When that band comes out at halftime, you're going to be, well, really pre-game, they'll come out. They'll come out and set the stage, and when the team runs out of, they'll probably run out through the band. So you are going to be, your heart is going to be jumping out of your chest with pride that day, watching him go out there. And Michigan has a fantastic band too. So, I wish I was going to be there with you. That's going to be amazing. I wish I was going to be there.
Speaking of flying, I hear you're a pilot.
I am a pilot. I've got a question for you. How do you know that somebody's a pilot?
If they don't tell you they're a pilot within 10 minutes of meeting them, they're not a pilot.
That's exactly right. How do you know a pilot? Because they'll tell you they're a pilot.
That's kind of the same with CrossFit. There's a few other professions like that.
Vegans?
Vegans, yes.
Yes. So pilot training, I had a few friends. I've got one of my dear friends is reached this, kind of upper echelon of, I guess, captain for Southwest Airlines now. My daughter, who actually works for the agency, is dating a pilot. He's a young guy up in the Chicago area, right outside of Chicago. He's finishing up his, I guess, pilot training. To me, from what I've seen from my friends who are pilots, and that's what they wanted to do for a living, and I'm talking outside of the military, it appears to me like most of those guys get out of pilot training. They go to work for, say, a large construction company who maybe owns a plane, like Yellowwood or Brassfield and Gorey out of Birmingham. And they do that for some period of time, I guess, to gain up hours. And then there's some jumping off point there, though, that they go from that to applying to United, Delta, and eventually they end up getting on as a pilot with those places. Am I right? Is that kind of how the trajectory works, Darren?
That's exactly right. There's actually a very specific jumping off point. So to be able to fly one of those large jets, you have to have 1,500 hours of flight time.
Gotcha.
And so they'll typically do smaller gigs around the country, building up those hours. And then once they hit that threshold, they start applying to United and American.
What did you say that 1,000 what? 500?
1,500 hours. So it takes most people at least 2 years to get that many hours.
Yeah, right.
So what got you interested in aviation and got you looking, aside from owning rental properties and running a company, hey, I think I want to fly a plane too?
No joke. When I was 6, I would read one book out of the encyclopedia, and that was the A book. And I would just sit there and read the airplane section over and over again. Loved it. And so I applied to the Air Force Academy when I was, coming out of high school, did the whole physical fitness exam and got my senator appointment and everything. And then I met with one of the admissions folks, and they were like, do you wear glasses? And I was like, yeah. They're like, well, you're probably never going to fly a plane then, because back then that was just not a thing. And so I said, well, the only reason I wanted to come here was to fly a jet. And so I kind of put flying on the back burner, but it had been my goal since I was 6. And flying's expensive, so I knew I wanted to save up until I could get a plane that could really do cross-country trips.
Right.
So I've been saving for about 10 years. Finally got a big enough nest egg together that I was ready to make the leap and get the plane. So it was the culmination of literally a lifelong goal.
So do you use the plane for Steadily business and personal business, I'm guessing? You kind of have the double-edged sword there?
Yeah, we've got an office in Austin and Kansas City. So I sit in Austin, and then we've got 100 folks up in Kansas City. So I make that trip real often, and usually I'll take up 4 or 5 other people with me for like a day trip. So it's been an amazing addition. took a
I have
trip
I
that,
have a stupid question.
yeah,
How hard is it to fly a plane?
it's hard for about 10 minutes. And then you've got 2.5 hours in the middle where you're doing
Hmm.
nothing.
Ask him how hard it is to fly a helicopter.
Have you flown a helicopter?
That one's hard the whole time, from what I hear.
Yeah.
You're controlling that son of a gun with foot pedals
Yeah.
and a
We
joystick.
were in the helicopter scared the crap out of me. We were in New York, Patch. We were in New
You
York.
can die in a
and-
helicopter.
Yeah, we were in New York, Darren, and our flight got delayed, and then we rebooked from Newark to JFK, which was like another hour and a half drive, and we were having breakfast with Nigel Walsh, who at the time was the, I think, chief insurance something at Google, and he's got a thick Irish accent, and I can't replicate it, but he was like, "Hey, I've got this helicopter card. I think what's the name? Blade." He's like, "I got a Blade card." He's like, I'll buy you a helicopter ride to JFK." And I was like, "Man, it's like if I die in a helicopter, like flying through the Grand Canyon, I could probably be okay with that. But if I'm just trying to save an hour and a half to get to the airport, I think I'll pass." This was like right after Kobe died too, and I was like, I'm good. I'm
Yeah.
good. And I kind of regret doing that because that would have been a cool story.
Hey, Darren. I have a question. It's more of a personal question, but not really. So it's been a minute. It's been a minute since Bradley and I spent a week doing the One City World Tour in Austin, Texas. He and I both, not long after that, were down in that area. I think you were down there twice.
I went there 3 times that year.
3 times that year.
Mhm.
Is Austin still growing and all that like they were back when we were there in that 21, 22 time frame? I mean, is it still just blowing up like it was?
No. Solid answer. So home prices in Austin, I think on any chart, it's the first or second biggest decliner in
Okay.
real estate prices of anywhere in the country. I think in most markets it's down 7 to 10%, certainly is in
Okay.
my house. And yeah, the growth has slowed a great deal. It took a while. There was like this lag effect because, folks
Mhm.
broke ground on apartment complexes and they all
Sure.
kind of came online after the boom had ended.
Mhm.
But it really slowed down because there was a lot of folks that in COVID were saying, "Hey, Austin's a place that I can have a lot of fun and it's fairly
Mhm.
affordable. Let me move from the coast to come to Austin and keep some of the things I'm used to culturally." And Austin got expensive real quick. So then they were like, "This isn't that much cheaper." And so they stopped moving here.
Mm-hmm.
I'll be dang. I didn't know
Interesting.
that. But that's back too when Joe Rogan was on air telling everybody to move to Austin. And you got to come to Austin. You got to come to Austin. I didn't know. I just knew when Bradley and I was there, it felt
There was
like
cranes everywhere.
Yeah, it was at the zenith of its,
Yeah.
height of.
So, yeah, go ahead.
No, I was going to say, it's surprising to me that it slowed down, but it kind of makes sense because, I mean, you can only grow so much.
Yeah.
You know what I mean?
And in that regard, what kind of things are you guys seeing on Steadily? I know you have probably an interesting perspective from the other side of the insurance industry, especially dealing with rental properties and things like that. And, typically when home prices start falling, you see real estate investors gobbling stuff up. What kind of trends are you guys seeing with the current market, not only from a real estate standpoint, but from an insurance and reinsurance standpoint?
Great question.
We're entering a very pivotal part of the year, the last quarter, as far as insurance goes.
The overall market is softening, specifically reinsurance markets. And so we're starting to see flat to down pricing trends, which is great for folks buying insurance because all of that trickles through. It takes like a year or so for it to play out, but reinsurance is getting cheaper. More folks are interested in coming back in, which is the exact opposite of where things were 3 years ago. So soft market now.
Yeah. Yeah, we've started to see that too. I operate in a coastal market, and everything usually happens here first. And we're starting to see some flat renewals or some even decreasing renewals, which is it's encouraging, but it's also like, okay, I worry about some of my brothers and sisters who the growth of their agency has only been relying on rate increases for the last few years. And it's like, okay, you've staffed up, you've expensed up, but now you're going to lose some of that revenue.
That's me. Yeah, I was going to ask too, your treaties that you put together as the CEO of Steadily, are all those things that you're doing with reinsurance on your end? Is that a January, February timeframe when you're having those meetings to renegotiate those for the 26 year, or are you getting ready to go into that now? How early do you guys get together?
We're actually on a May 1st cycle.
Okay.
Most companies are on a January 1st cycle, so they call it the 1/1 renewal
Right.
season, but we're in May. So we kind of we're just coming out of it where we're like, that's done. Let's
Right.
move on.
Yeah.
So
Sure.
we won't start thinking about it again until February.
Gotcha. How did that play out to get on that May cycle versus the January? Was that just how it shook out with the formation
Yeah,
of Steadily?
it just that's the way it shook out with the formation of the company. And
Yeah.
then you had all these treaties that were just stuck on that date. And so they just kind of perpetually roll over. I'm sure
Right.
at some point we'll launch a new program that'll get tied to the 1/1 and then things will gradually like migrate over there. But for now, it's nice to not be part of the stampede on 1/1. We get more
So
attention from
It
our
might be,
reinsurance
I was about to
brokers, et cetera.
say, it might be an advantage.
Yeah. It's
So
nice to be off cycle. It's like tax season, if you have to get
Sure.
your return in on April 15th, it's nice to be able to do it off cycle.
Mm-hmm.
So tell me some new things going on at Steadily right now. What do you get? What are you looking at? What you got your eye? I know you got your eye on the prize. You're probably looking at some goals coming up here in the next year or two. You got some cool stuff you got coming out?
Yeah, we built something new that we're going to launch here. Well, it's already turned on for one company, but I can talk about it here. So we had a ton of property managers that were reaching out to us saying, I've got a problem where I've got 200 doors
Mm-hmm.
and I don't know if these people are complying with my insurance requirements. Like I
Right.
require that my landlords list me as an additional insured as a
Mm-hmm.
property manager to make sure that if something happens and I get sued, their insurance is going to cover me. Like that's a requirement. Really standard. Most people are looking for like 500K of liability coverage. They're like, but I
Right.
don't know. They tell me they've got it, but I don't know. And they're like, what can you do to help with this? And so we built a tool called Coverage Check. And what it does is we just suck in all the data for all the properties that we insure, brief
Mm-hmm.
those, and then we contact all the owners that are in the property management system, and we say, hey, all you got to do is press this button and either like attach your Dropbox, throw some files in, whatever, and we'll do the rest. So then we suck in all these policy data, all these spreadsheets, whatever they give us in total chaos,
Mm-hmm.
and we will run it all through AI. And then we say, we're looking for the policy number, the name of the carrier, what they've got in coverage, and who the named insured is. And as long as that all checks out, then we go back to the property manager and we're like, 92 of your properties are in good shape, and these three have no coverage whatsoever. What do you want to do?
Right.
And
Right.
that's been amazing. And I think that one's a good example of the approach we've taken over the last 5 years. We just hunt around for a problem somebody's got,
Yeah.
and then
Mm-hmm.
we're like, hey, how can we solve this for them?
Interesting.
That's amazing.
Interesting.
I can see property managers absolutely loving that because, you got 100, 200, how many houses you got that's under your management? Man, it's hard to get your arms around all that and keep up with who's on first and what's on second. And is this,
Mm-hmm.
is this right? Am I good? Are we
Yeah.
gonna have a problem if we have a claim? What's going on?
Yeah. So one thing I was going to bring up, and I don't know if I had already done this when we recorded last, but my wife and I bought an Airbnb. Scott's heard that 8,000 times over the last 2 days, but I'm self-managing it, and I've just dove in head first all the Airbnb groups on Facebook, and every single day, Darren, who do you guys use for insurance? There's a lot of Airbnb owners that maybe started not quite telling their insurance company they're short-term renting it, right? And they're slowly figuring out, oh crap, I've got a problem. And you see a lot of companies mentioned over and over, and I've even seen Steadily a lot. There's one group I think that has an affiliate deal with you guys. What, in terms of that, what makes Steadily different?
We looked hard at what it would take to profitably insure an Airbnb And we came to the conclusion that most insurance companies out there were way too scared of Airbnbs.
Mm-hmm.
We're like,
Mm-hmm.
yes, the risk is higher, but it's not as high as you think. And so
Right.
we went back and looked at the claims, looked at the actual risk we were signing up for, and we came up with a product that's like, yeah, we like Airbnbs. It's not like, oh, we'll take them. Like we like them.
Mm-hmm.
And so we came out with a product that's built for Airbnbers, and we've seen huge growth in that category. It's been great for us.
What have you guys seen? Do you have any claims data on, hey, people who are doing this thing tend to have more claims than people who aren't in terms of Airbnb?
On the Airbnb side, it's so much more driven by the demographics of the
Yeah.
property. So,
Mm-hmm.
two party houses in different cities have more in common with each other
Right.
than a two-bedroom condo in the same city does with the party house.
Right.
So it's all about you're looking for, hey, how many beds do you have in this house? And
Right.
whenever that number starts to get into the double digits, you start to get worried.
Yeah.
When you see hot tubs and everything else, like the liability risk there is getting a lot higher.
Yeah. One of my buddies, I was talking to him the other day, and he's like, you know what you should do? He said, we stayed at an Airbnb in Italy, and it came with a mini bar. And I'm like, bro, you're talking to an insurance agent. I'm not putting a mini bar
Right.
in my, so some college kids that are underage can rent my,
Sure.
yeah, no, not doing that. Have you guys looked into one trend that it's been going on for a while, but I've been seeing it more lately? Have you guys looked into um, integrating or offering some of these like smart home devices, like the Ting device and things like that, and giving some sort of premium discount? Because I remember a few years ago there was a device called Roost, and I'm sure they're still around, but it was basically a smart 9-volt battery, and it would connect to your Wi-Fi. And the statistics around it were when a smoke alarm went off, if you knew about it within a certain amount of time, you could avoid a total loss. Essentially, there was claims data on, a fire when you're home versus a fire when you're not. And yeah, that's the Ting. And have you guys looked into any of that? And personally, I have a Ting device at all three of my houses.
We've looked at both of those companies. Roost has actually come a long way. The product that they've got now doesn't even need Wi-Fi. It uses low bandwidth cellular. So you don't
Nice.
even have to worry about the Wi-Fi going out. It just uses
Gotcha.
this like low bandwidth GSM protocol to do it. It's very cool. The We love the idea of giving folks a discount if they can demonstrate that they've got those devices up and running in their apartments or in their rentals. The problem that we found when we tried to subsidize actually shipping the devices out
Right.
was that their the cost to us of getting those devices out there was way more than we were going to save in claims. Like, yes, there
Gotcha.
was going to be savings, but it
Yes.
was about 4x the annual cost for us
Gotcha.
to keep the device out there active. And then the second problem that we found was when you look at the activation rates 12 months later,
Yeah.
for a homeowner, it's about 25%. So you're losing 75% of people, and that's for homeowners. When you're talking rental properties and you have people coming in and out, the devices just get unplugged, they walk away. And so what we've been looking more into, and we hope somebody builds this at some point, are the things that are inside the drywall.
Mm,
They're just permanently powered. They're always there. You never have to worry about someone unplugging them, renewing the subscription, what have you. Just these are always on type of devices. I'm
Right.
talking like flow control, electricity surge, everything else.
yeah.
Those kind of devices are really exciting because for one thing, you can put tons of them in the house
Right.
and you know that they're gonna be working for 10 years. So
Yeah.
that's, I think you see that a lot more on the commercial side, but that's where we get excited because on the personal side, the economics of us as an insurance company shipping a device out to somebody get upside
Yeah.
down real quick.
Yeah, we about 5 years ago, I was working on a co-op program with a carrier where we were going to use Roost, where basically we were going to pre-order the Roost devices. The carrier was the Roost 9-volt batteries. The carrier was going to pay for it, and we were going to basically put a sticker on it that had the carrier's logo and my logo. and we were going to ship it to people every 6 months. Hey, change the batteries in your smoke detectors. But the cost of shipping and all of that was just like, it didn't quite make sense. Yeah, it's interesting. There's a lot there's a lot you can do inside the walls. Like when my wife and I built our house, our primary home, there was like this manifold system you could buy that if you had a water leak, you could specifically shut off that one area of the house. Unfortunately, we weren't able to use it because logistically there was nowhere in the house that we could put it that would make sense. But there's a lot of stuff like that. We purchased a device, I'm sure you've heard of this, for the Airbnb called a Minute. I think that's how you say it. And it is it's designed as an anti-partying device. And it's a subscription deal. It's $150 a year. You don't pay for the device. You just pay for the subscription. And it looks like a smoke detector. It is a smoke detector. But what it does three things. One, it notifies you immediately if somebody's smoking in the house. It can tell the difference between cigarette smoke and marijuana or other things. Because it connects to your Wi-Fi, it can also then tell how many devices are connected to your Wi-Fi. So it can tell you, hey, you've got more than, and what you do is you put in, when you set it up, you put in, this is our max, our house is 13 people. That's the most it'll sleep. And I slept there this week with 13 people and it was a lot, but it worked. 13 people and basically it does the math. It's like the average person has 2 devices. So it's 26. So if you get that, it's like, hey, you got a party going on. And then the last thing is noise. It detects noise, but it looks just like a regular smoke detector. I thought that was pretty neat. They also have a service, if you pay $300 a year, that they will actually call the people and tell them, hey, cut that out. So you don't even have to do it. I thought that was pretty neat. Now, from an insurance standpoint, other than the house getting trashed from a party, I don't know, even in that scenario, would insurance even come into play? It would have to be a pretty bad party, you know?
Hey, Darren, we've got to stop right there for just a second and rewind this podcast. He just said he stayed at his rental house this weekend.
I was like, really? You're just going to let that slide?
Hold on. No, of course not. There was 13 people there. Now, Darren, what you don't know that I know is that was 13 family members, including his mother-in-law and father-in-law. So here's the question. Were you kind enough to give up the master bedroom to your in-laws and you sleep on the floor, couch, or bunk bed? Or were you selfish and you kept the master bedroom to yourself and made them sleep in a guest room, bunk bed, couch?
So they got there before we did.
Okay.
A day before, but they were kind enough to reserve the primary bedroom for us.
Well,
but we really don't have, all the bedrooms are the exact same size. We have king beds in all of them. The only difference is the primary, air quotes, is the only one that's downstairs. So,
moving on.
But what's funny is I have a 1-year-old, and the only room in the house that doesn't have a window is the downstairs bathroom. So his crib is in the bathroom.
That's not terrible.
So in the middle of the night, I was having to sneak up to somebody else's bathroom to use the bathroom because I didn't want to wake him up.
Right.
Yeah, it was a lot.
Darren, I got a question for you going back to something you said. We were talking about expense, is the juice worth the squeeze to send this stuff out? I would think, from just listening to territory reps and C-suite execs with other carriers, that the water damage claim stuff would be worth sending out the monitored pucks to activate in, like, bathroom, wet areas, hot water heater. I would think the juice might be worth the squeeze for that. Am I right or wrong?
When you can keep the activation rate high, so you're getting all of the savings, yes. When you factor in the fact that after 12 months, you're expecting that at least half of those devices aren't going to be working anymore. Today, no. But the good news is that they keep getting cheaper. So there's going to come a point where, hey, this math actually works. And then once you hit that tipping point, it just works from there on in. We got to go back one more point about this Airbnb, though. I learned 2 things in my 30s that radically improved my quality of life, spending money on. And they're both about separation. The first one is separate comforters in your home bed. That's great quality of life. Second one is separate Airbnb house when family comes over for the holidays.
Yeah.
See, Bradley, I told you should have bought the house next door.
Yep.
This we wouldn't even be having this conversation right now. That's great. I'm going to always remember that. I'll always remember that. So, Darren, today as we stand here, we've kind of gone into I think I led our first podcast of the week out talking about how it feels like in my agency that we have cycle of insurance here for a second. The hand of the clock has moved back over to the soft market. We're seeing 80 to 90% of our personal lines policies, homes, renewing at a zero increase, maybe a little bit of a decrease. The ones that are increasing are obviously the ones that maybe took a claim last year for something, and so obviously they're getting a little bit of an increase. But the old adage in insurance that I've learned over the past 17 years of being in this industry, the soft market never lasts very long, not as long as you hoped it would. And the hard market always seems to last twice as long as you want it to. Would you kind of agree with that sentiment?
I'd kind of agree with that. And I want to go back to something you mentioned in the beginning, which was looking at the growth in the business compared to the growth in the number of customers, or maybe, maybe the shrinking. And
Right.
so it's this kind of time where things are shifting from one environment to another, where you just got to look at your business under a lot of different ratios and say, are things healthy? So if I ask an insurance agent or an agency owner, like, hey, what's your retention rate? Maybe it's going to quote me as his premium retention rate. It's like, well, that number is 105%.
Right,
Things are going
right.
great,
Sure,
right?
sure.
It's like, well, what's your logo retention rate, right? Like your customer sticking with you. And if that number is, 75%, ouch. And so it's about in the good times and the bad times, looking at the numbers every way from sundown and making sure you're running a healthy business.
Yeah.
Absolutely.
I think you need to track premium retention and policy count retention. I think,
Right.
and account retention. I think you need to look at all three.
I think you've taught us a couple of times on this, but I'm going to ask you to do it again, Bradley. In your agency, you have a very easy formula for client retention. What premium retention though? What's that equation?
It's the same. The equation is the same for all three. It's what is our, let's say, account number in force this month, taking out all of the new business we wrote this month.
Correct.
Because that's one mistake I think people make is including the new business they wrote in August 2025, right? Take that out. So you take number of accounts minus new business divided by the number of accounts from last year on the same month.
Yeah.
And that's how we calculate it. That's how a lot of the big agencies calculate it. In my opinion, revenue retention is the most important because that's the bottom line, but account retention is actual retention.
Right.
If especially in this hard market, if our revenue retention is 95%, but our account retention is 85, that's a problem.
Yeah.
That means we're actually losing people. And as the market softens, it's going to go down.
I love it when an agency owner will show me one of those, I don't even know how to describe them. One of these net retention charts where they've got cohorts of customers going back 3 years, and they're like, I had 150 accounts 3 years ago, and I've still got 142 of them today, and they show you all those cohorts over time moving through. That's the real test of somebody who knows their book.
Yeah.
I love that. Well, Darren, I appreciate you being on the show today. We've got to get off here and head on down the road, but I'm glad you got to come on today and talk with us for just a minute. Do you have any other questions before we go? I appreciate you so much. If you're ever in the Mobile or Huntsville area, please come visit us and
just fly on over.
Oh, anytime. Yeah, just pick us up. Let's go somewhere cool.
We'll head on down to Houston and go find a beach and just
there you go.
land on the sand.
There you go, man. he could fly over here, pick us up. Let's go to Miami.
There you go.
That'd be a lot of fun, wouldn't it? Guys, you were listening to the Insurance Guys podcast, and as I end every episode, rewards come from action, not discussion. Get your ass out from behind that desk today. Go write insurance for your wife, for your husband, for your kids' college fund, for your parents and your in-laws like mine that are struggling out there today. Go write good business for them. Write good business for the agencies that you represent, and write good business for the carriers that you represent, like Steadily. Bradley Flowers, I love you.
Love you. Thanks, Darren.
Darren, thank you, sir. Hey, have fun in that Michigan game, brother. You're going to have a blast, I promise.
Thank y'all.
All right, take care. Guys, you were listening to the Insurance Guys podcast, and we love each one of you. Thank you so much for being a part of our family, and we'll see you back here real soon. Take care.